Welcome to the second tutorial created today, 2015, April 16th. The second tutorial deals with the commuted income function within the LifeGuide multi-calc functions, and it's fairly simple. The commuted income is the amount of periodic payment that would be receivable from a known single lump sum, blended principal and interest over a specified period of time. The income can be either indexed or it can be fixed. An example of that would be how much can we expect on a monthly basis from the death benefit on $1 million life insurance policy, let's say over 21 years. So let's do it. First, we go to the multi-calc functions. So we click on the money bag icon at the top of LifeGuide's main screen, and we select multi-calc. Under the multi-calc, we will go for commuted income, and per the example earlier, let's use $1 million worth of death benefit, and let's say that the interest rates for the period would be 3.5% net, and we'd like to have the payments monthly. We would like to have the payments at the beginning of each month, and let's say that we would like to have the payments non-indexed, in other words fixed. They'll remain the same, and we want it over 21 years. As soon as I've completed the entries into the respective fields, I have my results. So if I go at the non-indexed income, blended principal and interest, out of $1 million worth of death benefit, I will have $5,564.77 per month over a period of 21 years. Let's take a look at the details. So we click at the details icon, and we see the schedule, payment by payment, right through the years, 21 years. We can scroll down and see any point that we want through the period. We see what the value of the fund is at that point, what the payments are. Here they're fixed, the amount of interest that's earned on the fund itself, the interest that's accumulated since the beginning of the payment period, and the balance together with interest at any point. At the top, let's go back to the beginning here, scroll right back up. We have $1 million worth of death benefit, and let's say we can invest it at 3.5% net of tax. We want monthly payments at the beginning of each month for 21 years. The payments will be $5,564.77, and as noted earlier, the payments are paid at the beginning of each month. We can put them at the end of the month, and it will be a slightly larger amount, but not much. And here it is in the narrative. If the commuted value is $1 million, and the rate is 3.5%, and the payments are to be paid monthly in advance, meaning at the beginning of each month over 21 years, then the payment amount is $5,564.77. Let's close this and go back here. If we say we want the monthly payments indexed, in other words, to keep pace with inflation, and let's say inflation is going to be 2.5%, then we see at 2.5%, it's instantly calculated for you. The monthly payments will be $4,384.75. If we say that we want the payment in arrears, meaning at the end of the month rather than at the beginning of the month, we click here to say in arrears, and we see that the amount of each payment is slightly increased, in this case 4388.30 versus 4384.75. So it's only a few dollars, but you can do it either way. You can change it to weekly, bi-weekly, half monthly, 2 monthly, quarterly, semi-annually, or annually, which I don't suggest, but you can go either way. Normally people are used to be paid monthly, half monthly, bi-weekly, or sometimes weekly. In any regards, this concludes the quick tutorial on the commuted income, or the amount of monthly income that could be received from a given amount of death benefit proceeds. Thank you for watching the tutorial.